Guys, I just bought the dip this morning on my cryptocurrency portfolio. There's 4 assets I've accumulated more of, which I want to share with you. My exact strategy, what I'm buying, where the market is right now in terms of where the market's going, and also my game plan and how I'm deploying capital. So in terms of where we are right now, I really think at a large level, if we zoom out, there is a very big difference right now between the value and the price of cryptocurrency. So the fundamental things that are happening, which I'll share with you in this video from a crypto perspective, have never been stronger in my opinion. However, from a macro standpoint, we are seeing really, really bleak conditions, and not only in crypto, but the stock market as well. I literally just sat through the whole congressional hearing from Trump and listening to him talk about nearly for an hour and a half about everything that's going on in the US. Crypto was not mentioned once, which yes, you could look at as a negative. But there is so much more important stuff going on in the world right now than just crypto. I think we forget that crypto is in this small bubble. We all live in it. We all think that this is what's going on and, everyone should revolve around crypto, but it's not reality. Crypto is such a small part of the larger financial ecosystem and the world, right? But that's a positive in my opinion. Where we are right now, if we zoom right out again, if we look at just the total market cap, excluding Bitcoin and Ethereum, if we think about our altcoins for a second, we're very worried, we're very panicked. There is some very normal corrections going on. So back in 2021, we had a 48% pullback. We had a 25% pullback here. And then also more recently, we also had some of these smaller dips even here during the 2018 bear market, which felt really bad. But again, we're about that 30% range. At the moment, from the peak of where we were back in December to now, we're only at that 35% mark, right? So in context, it isn't quite as big as what you may think. However, it does feel very painful, especially if your portfolio allocation is tilted to more altcoins. Now, if we look at down even at some drawdown analysis in contrast to previous times, we're really hitting some strong buy signals, in my opinion, across the board. However, it may feel the wrong thing to do. So here's some data to sort of back that up. So if we look at the price drawdown analysis, which is basically in previous years and bull markets where we've had these price drawdowns, these are usually the best times for buying. We saw this back in 2024, middle of last year. When we get these big corrections and pull downs in price, these are really good buying opportunities that we can see price sort of rebounds not for long after. And we're in one of those periods right now. The other thing as well is that Trump has come out with a lot of stuff, and listening to his congressional hearing today, there is a lot of things that he's pushing. But really, at the core of it, in my opinion, he's trying to boost the economy and get the country back in order, right? That's pretty obvious. What we saw this morning was that we're already seeing potential compromises and tariff de-escalations across the board. Will this actually happen? Not sure. However, we are seeing that a lot of what Trump does is he's trying to go out and really cause a big scene, put the foot down and try and really make sure US is back in the powerhouse in the position. And he spoke about how other countries have kind of been taking advantage of the US for a long time. This affects financial markets. Now, from a crypto perspective, we're seeing that most importantly, the things that affect crypto as a risk on assets are things like interest rates, M2 money supply, and also just generally the investor sentiment towards crypto. We saw the treasurer this morning come out again on Fox News and speak about how they're committed to lowering interest rates. Trump just mentioned that as well in his Congress hearing. If we see lower interest rates, that is a big positive towards crypto. However, fear is still at very low amounts right now, in the 20s. It was at 10 last week before we saw Trump come out, right? So ultimately, where are we seeing the market going from here? Well, fundamentally, as I mentioned, there's been some amazing stuff happen. The SEC has basically come out and they have started to, turn off, finish, close, however you want to look at it, a number of cases against crypto organizations. Remember back in the Biden administration where we had Gary Gensler at the helm, he was cracking down on everything and wasn't giving us good clarity for what companies should do. A lot of these have been wiped out now. The Coinbase case, the Robinhood case, Gemini, Kraken, Consensus, a lot of these Uniswap labs, a lot of these companies are now in the clear from the government regulation, which is really, really positive for companies being able to build and continue to add value and create things that are valuable for investors. The next thing is the M2 money supply. Global liquidity is trending higher. This is one that's been, pushed around on Twitter for a little bit now over the last few weeks. The global money supply, the M2 in the green chart here, is trending higher. Bitcoin traditionally follows M2 money supply to a T. And if we see the M2 money supply continue to go up and we see rates come down, this is where we're going to start to see the market start to grow. Now, one of the other biggest factors in, the limiting growth of Bitcoin and crypto at the moment as well is quantitative tightening. So we've been in quantitative tightening for a very long time. If you zoom right back out to the previous cycles, basically at the start of when they announced quantitative tightening and when also they inverse and to either turn it off or start quantitative easing, has been some really good periods of time to basically see when the cycle starts and ends. Quantitative tightening could end this year. We've seen that in the FOMC minutes. If they start to reduce that and or finish quantitative tightening, that's going to be really, really positive for the ecosystem as well. I don't think we're going to go straight into quantitative easing, although a lot of people would like that. Ultimately, this is good for risk on assets. At the moment, everything has been trending against that, and that's why we haven't seen a lot of growth in the sector for a little bit. So my game plan and how I'm deploying capital. Well, I put this post out to members this morning. Basically, I have deployed 1/3 of my capital into some assets, 4 assets in particular. I am splitting my available cash into 3 different components to DCA in. So I'm splitting it highly in BTC, 60%, ETH 15%, Sol 15%, and SUI 10%. So these are obviously not the highest risk assets. There's a number of high risk assets that I have in my portfolio that I'm staying on the sidelines for now because we still potentially have downside to come. Back to the Bitcoin chart, if we go back to here, the previous consolidation period in the highs was around this $70,000 level back in March of last year, right? So I think we could potentially continue to see Bitcoin go anywhere between where we are now in this sort of $87,000 level. We could see it go down a little bit further. Anywhere between where we are now and 71,000, I'm pretty happy with that, right? Even if we go down another 10%. If Bitcoin goes down another 10%, the altcoins will go down further. Won't be surprised to see Ethereum go down towards, let's say, even 1,700, maybe even 1,500. Wouldn't surprise me. However, that is not changing my opinion in that matter. If we go below the previous accumulation period of 71,000, then it's a bit of a different story and we're going to change our game plan. But ultimately, I think we are far closer to the bottom than we are the top. So from a risk and reward perspective, I'm going to continue buying those top 4 assets. Now, I've been buying predominantly Bitcoin for the last 12 months and dabbling into some of my altcoins, but I also adjusted my portfolio not that long ago where I shared my portfolio update to reduce the risk, the higher risk on assets that I had. So I reduced my meme coin allocation, my AI allocation, and rotated them back into Bitcoin and the top assets. And you can see here over the sectors, that's been a really good move, right? So over the last year or so, ultimately AI, gaming, down 76, 72%. DeFi has been a reasonable one, which I've stuck a lot in DeFi still. But ultimately, the 2 sectors that I'm most bullish on still at this point is next-gen layer 1s and Bitcoin, right? That's really been the 2 sectors, or Bitcoin's not a sector, but being the 2 assets that I've been most bullish on, and I continue to accumulate. So from like a category perspective, these next-gen layer 1s is what I'm most excited about. That's where a lot of the infrastructure plays are. That's where a lot of the VC funds park their money. So Solana, SUI, I've recently added Hype to my portfolio, and then also having a large amount of Bitcoin. If you've had a large amount of Bitcoin, your portfolio is not doing too bad. But if you've been majority altcoins, your portfolio has been absolutely smashed. And that's why we did this portfolio reallocation not that long ago to really make sure that we had a good structure going into this period of uncertainty. Now, the other thing I did mention in this post this morning was around that, there are some good things happening. As I said, rates potentially going to come down. The Treasury signaled that today. Trump said that in his Congress speech today that he really wants interest rates to come down. He's very pro-crypto. M2 money supply is increasing. However, I don't believe we're going to have a V-shaped recovery. We're in this U-shaped recovery. So for me, when we're in these periods where we may consolidate for a little bit, I want to dollar cost average and accumulate those assets. If you go and dump all your cash in this period of time, you're basically going to be trying to catch a falling knife and or utilize all your cash before the market goes down a little bit further. But balancing risk and reward. But you don't need to be a hero and time the absolute bottom, in my opinion. I firmly believe, and in my experience, accumulating during these levels can result in you adding a lot more to your portfolio than trying to time it and then eventually missing or not timing the absolute perfect bottom, which is very, very difficult to do. So there are a few sectors that I obviously am invested in outside of these 4, but from a returns perspective, we can see here Bitcoin over the last year has done extremely well, still up 40%, even after this big consolidation. And also you've got next-gen layer 1s or smart contract platforms have done really well in contrast to the rest of the market. DeFi down quite considerable. AI is taking a pounding. With Nvidia down 8% or 9% over the last few days with their earnings call, AI is going to be heard. Pretty much AI is just going to track those larger companies. We need the risk on to come back and flow in. Now, will we see a traditional altcoin season like we've seen in the past? I think there will be, but not probably what we've seen before. As I mentioned a number of times before, with the huge inflows we've seen from ETFs, you're not going to have those traditional whales selling their BTC into altcoins to increase their gains, because a lot of those bigger whales potentially have money in ETFs. So will we see traditional altcoin season? Maybe, maybe not. You've just got to be a lot more selective. So for me, yes, by holding a little bit more less risky assets, it's probably not as exciting or sexy, and I'm probably not going to get those 5x returns, but it's very, very hard to find those. And with the hundreds of thousands of coins being, created over the last month or two, and the millions over the last couple of years, it is becoming extremely difficult to try and find those assets unless you are trading very, very fast and very, very, very in the market. So from like a total 3 market cap perspective, excluding BTC and ETH, we're only, as I said, 30% off the top. But even when we hit all-time highs of 1.4 trillion back in January and November, slightly above the highs of 2021, a lot of the coins were not at all-time highs. Ethereum was a long way off. Solana was obviously in the clear, but there's a lot of coins that had not made their all-time highs yet because a lot of that liquidity had been going into meme coins and other things. So again, from a portfolio construction perspective, I've really been hot on this idea of, really, remaining patient and building up your BTC stack, because Bitcoin continues to lead the way. And I do believe that over time, Bitcoin is only going to grow, especially as we're seeing high net wealth start to allocate, as we're seeing sovereign funds allocate, and also as financial advisors, as superannuation funds start to allocate. Bitcoin is going to be the asset. They're not going to go too far down the curve. Now, on the other side, if you are a little bit concerned about where you're at, maybe you have over allocated to altcoins, maybe you don't have enough Bitcoin, there's a couple of options. One is you can de-risk now and move some money into stables, although I will say that I think we're a lot closer to the bottom than obviously the top. The other thing is to just reallocate, and that's something that we've shared with our members, quite consistently recently. And I had a platinum member the other day I spoke to, had not a lot of Bitcoin. He still only had 25-30% of BTC, but he had a lot more allocation to altcoins and hadn't had the time to reallocate. I would still think that reallocating back into some of the less riskier stuff from a low cap altcoin perspective is the right move, right? Super risk on assets still right now are not going to be, not a lot of liquidity is going to find those assets versus sort of the top 10, top 20. Now, on the flip side, you could say, well, you probably don't want to capitulate like the rest of the market. And yes, I agree with that. Like, the probably time to allocate was a little while ago. But I'm just talking even into the future and playing the long term. I do believe a lot of those larger cap assets are going to continue to be less risky and continue to give us good growth over the period of the market, and then probably add back into those lower risk assets as we start to see rates come down, as we see potentially quantitative tightening slowing. I think that's going to be a better play than trying to time the bottom right now, because a lot of those altcoins have had big drawdowns. So it is something to consider. But overall, from a portfolio perspective, again, I've got majority BTC, just a tick over 50%. I continue to buy that. Next gen layer 1, Solana, Sui, ETH, very, very bullish on. And I do have still a good chunk of DeFi. My prediction is, and we've seen this in past, is that we have a movement away from these meme coins and sort of the less fundamental projects, and we have a period of time where the market comes back and starts to reward projects with quality fundamentals, actually revenue generating or fee generating. They're actually doing something in the market, and I think that's going to be a shift we're going to start to see as markets come back and as more liquidity comes back in the ecosystem. People are going to start to look at those. Now, do I think memes will disappear? Absolutely not. Memes won't disappear in my opinion. I still have Pepe in my portfolio, but I'm not adding to those assets right now. And I guess the sort of moral of this is, from a strategy perspective, you've always got to be fluid. And for me, like during the 2022-2023 bear market, I held just all BTC and ETH. Right? I didn't hold any altcoins. But coming into that bull market, and this bull market, I've added to my altcoin positions, obviously. And then in the next bear market, I'll go back to BTC. Ultimately, my goal, if you know me well, is that I want to build as much Bitcoin and property as possible. And they're, for me, the two best assets that you can hold, right now. I think from a cash flowing perspective, obviously Bitcoin doesn't cash flow, property does. You can go and cash flow those properties, diversify and have that. Another area I'm seeing with our high net wealth group is that some people have an oversimplified portfolio and have too much of an allocation to a particular altcoin. So for example, someone that I spoke to the other day, he's got 15 million in crypto, had a lot of Ethereum and a lot of Bitcoin, right? I think he had 100 BTC, 1100 Ethereum, and didn't have much else. One of the best moves I made about a year ago was to start to offset my Ethereum into Sui and Solana. Well, Solana first and then Sui after that. I'm a big believer in Ethereum. I've been buying ETH since $80, but it obviously has not performed well. The market has rewarded the more sexy and new attractive blockchains and different assets that's going around. Ethereum is still struggling with its marketing, and it's still struggling with its point in the market of what is it and how does it differentiate. although the technology is great, and I still firmly believe it is one of the, if not the best blockchain, the marketing and how it's positioned to investors still struggles a little bit. So one of the strategies that I work with him on is to just offset some of that Ethereum. So let's say you've got 40% of your portfolio in Ethereum or 30%. It's not a bad idea to offset that against other assets in that sector. Okay, so maybe you go down to 20% ETH, 5% Sol, 5% Sui, for example. That is just a basic strategy. We can offset that, and you don't need to rely on all the market returning your gains in that one asset. Because on the flip side, if that asset underperforms, maybe you have 40% in a DeFi project, or you've got 40% in an asset that's really underperforming, that's going to bring your whole portfolio down. We really want to make sure we have a diversified portfolio, large amount of BTC. That way, we know the portfolio is always going to be manageable in the long run, and I'm looking for the lowest risk with the highest reward. I'm looking to minimize my downside. That's what I work with our clients on. Predominantly, these guys are high net worths, they're business owners, they're not full-time in crypto. If you have more time and you are more full-time in crypto, that's obviously something you can do, but you need to be way more dialed in the market, otherwise you're going to be drawn back. So I'm going to go a little bit deeper on this next week if you're watching this video. So on March the 13th, Thursday night, Australian time, we're going to be doing a high net worth crypto strategy session, going through the strategy predictions, going through my portfolio a little bit more, answering questions. My head of research, Matt, will be on there. So feel free to jump over. I'll put the link in the description to register for that. It's going to be a cracking session where you get your questions answered and really start to help you, for especially those that have more than $250,000. That's really my sweet spot. And you can start to look and feel about, some of those more high net worth strategies and insights, because there's a lot more things you can do with a larger portfolio, whether it be stable coins, yield, OTC, lending, being able to cash flow some of your assets, tax and structuring. There's a lot of things that you can look at when you're a larger portfolio to continue to grow that and minimize your downside risk. So go over and check that out. We'd love to see you next week. But that is it for now. I have bought the dip. Those are my assets. If you like this video, I'd love for you to leave a subscribe. Leave me a comment if you enjoyed the video and give me some feedback, and I'll see you on the next one. Thanks, guys.